Hi, and welcome again to another edition of Market Analysis for today, Wednesday, January the 8th of 2025. I'm Giovanni Benacourt, and this is a recording done by Vantage Markets about an hour and 45 minutes from the USA Open. So, let's take a look at the markets in regards to the news. Well, I'm pretty sure we've heard a lot of things going on around the markets. We've seen how obviously that the NVIDIA chips coming out, new ones and whatnot, the AI boom, the Magnificent Seven, and their rally, breadth, widening. So we're looking at the daily candlestick chart of the Nasdaq, and one way for us to obviously come in and determine a trend is by counting or by looking at how the market is making higher highs and higher lows, which would determine an uptrend, and lower highs and lower lows, which will determine a downtrend. Looking at this chart, okay, we can come and typically just, stand out, draw out a trend line, trying to hit or touch as many candles as possible, okay, from this all-time high. And we're seeing how the market obviously is making from that high, it's actually began to make lower highs, like so here, basically here also, okay? So two consecutive lower highs and lower lows will determine that we're entering a downtrend, okay? Or you could say retracement, correction in regards, because in a bear market, if we were to be in a bear market, then we will have to be considering that the market has moved 20% off that high to the downside, obviously. And we haven't done that, because if we grab that all-time high, which is 22,417 times 20%, minus equals, that'll be right around 18,000, as we spoke earlier in the week. So 18,000, once if we continue to move lower and we hit 18,000, then we can say, okay, the market has moved 20% and that we are in a bear market. Correction wise, a market to be corrected will be 10% from that all-time high. So 10% from that all-time high will be 20,175. So 20,175 will determine all the way down here. So we still haven't retraced, or we haven't corrected. So is the market going to correct? Are we in a correction mode? Well, it appears that the market has obviously moved to the downside from that all-time high. So let's just go with the trend. The trend is your friend. So the intermediate trend, intraday trend, is to the downside. So therefore, let's identify from where we are, from where the market is. We look back and we can identify levels where the market will find support. And it jumps at me these 2 points here. So that's where I'll set that level of support for the market, and an initial or a first level. That would be my second. That would be my second level of support, or it could be my first one, depending on how you want to look at it. Right? We could use that as a first level of support, and then we could use the 50-day moving average as the second one. Okay, that could be utilized like that, or we could also come in and use our fib retracement tool. So from this low to this high, how much are we going to be retracing? So the Fibonacci golden ratio, 0.618, is where the market is supposed to come to, and then from here, it should obviously rebound and move higher. We could also use that extension of 0.78. Okay, that could be another way to use it. Identify a level of support, but that golden ratio has been being violated right now. Doesn't mean that the market won't retreat nor reverse and then start trading higher. Okay, but as we sit here, the market seems to be entering that corrective phase. So therefore, we're going to be using those two levels. As far as resistance goes, well, we could use a 20-day moving average as a possible level of resistance, and then this second level of resistance. So there we have our levels for today. So going with the intraday trend, which is down, let's see if we'll come and revisit this these two swing lows previously made. Take a look at the S&P 500. So basically the same. Let's use these two levels. The 50-day moving average is right below it. Why would I use such low? It's almost basically there, but hey, it's a buffer zone, right? Then we use a 20-day moving average, which is almost really close to the 6,000, which is a psychological round number. So we could use that instead, and then those two candles right here, and leave that 20-day moving average as a dynamic resistance level, which is, as the market flips lower, most likely will turn lower. If it reverses, it'll turn upside. Then the Dow Jones Industrial. Here we have the Dow Jones. So the Dow Jones also moving lower. The 50-day moving average is being violated right now. We're trading below it. The lower band, we can use that as a probable level of support, and then 42,500 can be a level that we can use as our first level of support. Then as resistance, let's use that 20-day moving average. And then the second one, let's just use this top right here. So again, intraday moving lower. Crude oil, well, crude oil is continuing its rally to the upside. Okay, so again, we can come in and use our trend-based fib extension, and we want to measure the whole trend. What is the whole trend? We don't want to just measure one candle. We want to measure the whole movement. So from this low to this high, to where we are right now, and then those levels that you see here, the Fibonacci numbers, we can use them as our probable level of resistance and resistance. So we'll use 0.38% and the 0.23%. Okay, there we have our level of resistance for crude oil using our trend fib extension tool, trend-based fib extension tool. And then as for the support, we can use $74, which is a round psychological number. And then as the second level of support, this part right here, which is basically at 73. This volume cluster, we are entering overbought territory in the RSI, so keep that in mind. But market looks healthy and moving towards that 76 marker. Then we have Nat Gas, that it continues to just we're creating, even though they're pretty wide, equal highs, equal lows, but so far today in the morning, it's looking to recuperate or reverse what it did yesterday. So initially moving towards the opening of yesterday. So going long. Gold, safe haven asset, and we have the 20-day moving average still not being broken or violated. So they just keep those levels right there as they are. And yep, let's see, we could revisit yesterday's high, swing high. So going long. Silver, same token as gold, the 50-day moving average is acting as that level of resistance, and the 20-day moving average as a level of support, dynamic level of support. I'm drawing my line there, and 31 is the target for by the end of the week. Let's see if we get there. Copper was having some pressure yesterday and today, but it continues to move higher. You see that? So let's just reset our levels for where the upper boundary band is and the 50-day moving average. As far as support, let's use a 20-day moving average, and the second one will be 450. So going long with copper as well. Bitcoin, after fluctuating above 100,000, I said yesterday that if we see that Bitcoin comes towards 100,000 and it doesn't reverse from it doesn't rebound from there, it will continue to drop, and it did so. So right now we are looking initially 94,000, just because again that psychological round number, and the second one is going to be the lower boundary band, and resistance we're going to use 98,000 right around here, and then the second one, this is use the upper boundary band, which is just right above 100,000, which also that 100,000 is a psychological round number of resistance. So yeah, going with the trend, which is selling. Then the currency is the euro, seems to be not able to hold above 1.4 yesterday. It picked, but it then closed lower. So our level of support that we have placed yesterday is holding, but we need to update that, and I'm just going to use the lower Bollinger Band, and I'm going to leave that low, that swing low from last week, and that will be the target for today. If it continues to move lower, the 20-day moving average is going to be our level of resistance, and then this double top right here, our second level of resistance. So keep that in mind. Going with the trend, selling. The pound also is getting pounded in a big way. So it has moved way below our levels of support. So 123 is going to be a target. Let's see if we find some reversal movement from here. And then the second, 122.5. Resistance, 125. And then the second one, the 120-day moving average. And this most likely because the dollar index is just jumped. So the dollar is just moving ahead, full steam ahead. So let's see if it'll hit 105-ish support. Let's use 108. RSI creeping up into being overbought. So as it moves higher, then we'll see that continuation move to the downside on the currencies and metals, specifically on currencies. That's it for me today. Have a great trading day. I'll see you tomorrow.